Welcome back to Property Playbook. Clearly, I don't have my usual co-host with me today. It's Elena Saradidis, and I have Elan Weintraub and Jonathan Hacohen with me, mortgage broker extraordinaire and the chosen lawyer. And we're talking all things real estate, as always.
Love it.
Let's do it.
It is always a lot of fun when us three get together because we cannot stop talking about real estate.
Or eating sushi.
But I have the question of the century. What's going on in the real estate market?
Well, everything begins and ends with mortgages. So take it away.
Oh, I'm happy to start. You know what? The market is very specific right now. So downtown condos are very different than cottages, which are very different than, $1.5 million North York homes. So it's you really need a realtor and a team that knows the product, the inventory, the market. Specifically on the mortgage side, I mean, rates have been coming down a lot. So there's a lot of interest right now. The two big things with mortgage side that I'm seeing is a lot of people that got a mortgage a year or maybe 2 years ago, they might have a rate of 6%. And we're spending a lot of time working with our clients to figure out the penalty. Hey, your penalty is $17,000, but we can save you $47,000 in interest. So there's a lot of penalty optimization. I actually think it's a really good time right now to buy. I know this, you don't like when I hear when I say this, but I think it's a really good time to buy, especially downtown Toronto condos right now. And
can I tell you?
Yes.
I don't disagree with you right now.
Okay.
I actually think this is probably one of the best times to be buying. And it's not just downtown condos, it's anything. But you always have to look long term, as always.
Yes.
But what I know you've been telling your clients and what I've been telling my clients is buy with today prices and close with tomorrow's interest rate.
Yeah.
So what does that actually mean? Purchase a property today or in the next couple days or in the next couple weeks or in the next month or so, but close 60 days out, 90 days out. So benefit from today's price, but also benefit from tomorrow's interest rate because our predictions are interest rates are going to go where?
Well, they're supposed to plummet next year. So I I like to build on the interest rate commentary. I think, you're two things you said. If you're buying with a long-term in mind, whether you're an investor or first-time buyer, you're not buying and selling, sneakers or, something that it's a big decision. But if you're ready, you have the cash, you're ready to keep the property for 3, 5, 7 years. I do think it's a great time to buy. I got to have a great property. But if you buy today and set the closing, like you said, 60, 90, even 120 days out, get a lower rate, you're avoiding this potential bidding war mentality where if rates come down by 1% in the next 3, 4, 5 months or the spring market, you're getting ahead of the curve. But the other big thing and why I'm really bullish about long-term Toronto condos is the first-time buyer mortgage rules are changing on December the 15th. And on a very simple level, what that will do is it will let first-time buyers get a lower monthly payment, which means a lower stress test, which means they can borrow more money. So if someone can borrow more money and they have a lower monthly payment, guess what? They're going to be much more interested to buy. So if you can buy, before December 15th and avoid all of that competition compared to waiting for the spring. So what's going to happen in the spring? You're going to have competition with the new mortgage rules and you're going to have lower rates. So there is a strong argument that buyer demand will really sort of fuel up in the next few months.
I am going to touch on condos though, because I think the condo market is going to be relatively depressed until 2026, 2027.
Yep.
That is my prediction.
Yep.
And the only reason why I say this is because new construction sales have changed. When was the last time you saw a new construction deal that is closing in the next couple of years, like 2026, 2027? Like
a new deal coming in that
Yeah.
we're buying. It's funny because, the stash certificates for resale condos, review of agreements for new construction usually go hand in hand. I'm operating right now on a 9-to-1 ratio where it's more 9 for resale condos, stash certificates, 1 new APS review,
Maybe
right?
one.
Yeah.
Maybe one.
And what people need to remember is this: if new construction is not purchased in 4 years from now, in 3 years from now, and 5 years from now, that product does not get built, which means we will have a problem again. There will be a housing shortage again. in the next few years. So it really is a long-term mindset. But if you buy now, you will benefit in 2026, 2027 for condos.
But I will say
And you heard it here first.
from a lawyer's point of view, like my gauge is not the media and not what the word on the street on social media is. It's sitting there as a lawyer, somebody who's been doing this for over 20 years, and seeing my influx of phone calls and emails and what agreements are being sent in. And that's how I gauge. I don't have to look at the numbers. I don't have to see where our transactions are at or our dollar figures. It's simply what volume do I feel. And I'm noticing that, not just condos, but I'm noticing more commercial side. I'm seeing people buying and selling businesses, incorporating companies, going that direction, buying commercial properties. These are very good indicators to me because the more things are busy from the commercial end than I normally see, then residential is going to pick up as well. So I see a lot of activity from the business side, which people don't talk about, but that's a good sign for us from an economy's point of view.
It's amazing. Yeah. I have another hot topic, and the hot topic is what happens if you actually cannot afford to sell? Which I know a lot of people don't talk about, but I was recently in a negotiation and the selling agent fully told me we cannot sell for this price because if we do, the seller cannot afford to close. The seller can't afford to close, not the buyer, the seller. So what's actually happening? Are you seeing that more and more often? Like when should sellers be worried? When should they even be contacting you guys about closing?
Well, I would say for my end, I had one not that long ago. And it's something that if you're a seller and you're thinking of selling and you do the math and you're saying, you know what, with the debts, and let's say I have 2 mortgages registered, one is a straight mortgage, one is a secured line of credit, and I did the numbers, and once I sell and pay out my commissions, etc., I don't have enough money to close. I'm going to have a shortfall. That's when we start having those hard decisions. This is where the point where I tell people, be proactive now. Don't wait till you've sold and closed, and then you come to 2 weeks before closing and realize there's a deficit. This is where you may have to go back to your lenders and try to work out some sort of scenarios where you may have other properties and maybe you have to secure those other properties to pull debt off. So they'll agree to remove the mortgage as long as they're going to have collateral against another property perhaps. Sometimes, and I've seen this, it's not often, but you can come back to a lender and saying, look, both lenders, I don't have enough money to close. I want to get you paid out. We're going to have to work out some sort of payment here. And you may have to forgive part of it because it's better to forgive part of it than get nothing and have to go through some sort of power sale, etc. And funny enough, thank goodness it's not that many people that go through it. But I think based on where public perception is, lenders more and more would rather work with their borrowers and try to find a solution versus having an issue come up from a court perspective. So it depends on the people. But what I would say is from that end, speak to your professionals now and try to figure it out versus just letting it lapse.
Yeah, and I actually would want to take a step back because I think it's a very unintuitive, it's a very advanced question, but it's an unintuitive scenario. What do you mean a seller can't sell? And on a very simple level, if you bought a condo for $500,000 with 5% down, you put $25,000 down, you owe the lender $475,000, but then there's mortgage default insurance. Practically speaking, you owe the lender $500,000. Then you got to pay a realtor, a lawyer, all this and that. If you sell that condo for $480,000, you're $20,000 short on the closing day. And the lender is going to say, well, wait a minute, you owe me $500,000. We're not releasing you. We're not sort of letting this transaction go through. So there is a really big onus, I would say, especially on the realtor, because if the realtor takes a listing, doesn't confirm the mortgage, and it's not even that, there could be penalties. The penalties could be $10,000, $20,000, $30,000, $50,000. And it's like, you got to pay the mortgage, you got to pay this, you got to pay the penalties. You might not be able to close. So it's a very strange topic, but on a very simple level, you got to pay the lender back all the money, all the penalties and everything, and the realtors and all the taxes and everything.
One of the first questions I get is from the listing agent's point of view.
Yeah.
My client's planning to sell this. They're not being straight up with me. I want to know what's owing on this property.
Right.
Can you search what's the registered mortgage against the property? I'm like, okay, I can search and I can tell you, yes, there are 2 registered mortgages against this property on that date and what they were registered for, but I can't tell you what's owing currently right now. How many times has it happened that you're going to sell the property as an agent and all of a sudden your client didn't tell you they haven't paid their mortgage in 2 or 3 months and they've already gone into default and the bill is climbing and climbing?
Yeah,
Absolutely.
even not paying, but there's variable rate mortgages where the payments stayed the same. And in the background, the balance was increasing and increasing. And all of a sudden, they got a $400,000 mortgage. And 2 years later, they owe more than that, or they still owe 400 and they haven't amortized it. So,
Yeah, and this is where you got to do due diligence as a realtor. Your client has a mortgage. It's with Home Trust, and they secured it for 1 year. And guess what? You can't sell this property. You can't deal with it till the end of that 1 year. They're very specific about it sometimes. When you read, that's where I tell people you're going to go sign a mortgage and you're not sure. Speak with your broker. Speak with your lawyer. Make sure what you're getting into and talk through these scenarios. What happens if I buy this property? I'm signing a 5-year mortgage, and when can I break the mortgage? What are my penalties going to look like? These are good things to know before we register and close, then after.
Well, the conversation I usually have when I go into a listing is, we've already done our homework. How much did you buy the house for? How much do you actually need to sell? And does it actually make sense?
Yeah.
And if it does not make sense, like you're not going to make your money out, I will fully tell the person it does not make sense to sell, hold it. And like we've had situations where I've walked in and I've been like, you've put 300,000 into this house. You bought it at the peak. You put 300,000 in. After realtor fees, after everything, you're in the hole at least 200,000. I'm like, you cannot sell this. It doesn't make sense for you to sell this.
Yeah.
Why do you want to sell it? And that's a different conversation. If it's like, I want to sell because I want to upsize, I want to do whatever, then like, okay, we'll figure it out. But for $200,000, that's too much of a loss at that point.
yeah. Depending on your motivations and what's going on in your life, for sure.
I think this gives a good teaser for next week. What do you think?
Well, it gives us a good teaser for next week, because next week we're going to talk all things about what happens with foreclosures and power of sales.
Uh-oh.
It's going to be fun. Well, once again, it's Property Playbook, and I can't wait until you check out the next episode. Make sure to like, follow, and subscribe.